Now, a report out this morning suggesting Goldman bosses sold a bucket load of shares after getting billions in aid from the U.S. government. Let's go now to London, where Lindsay Janis joins us with that angle of the story. Lindsay?
Good morning, Scarlett. It looks like Goldman executives have been busy selling stock. The Financial Times has this story on its front page. It says executives sold almost $700 million worth of stock after the collapse of Lehman Brothers. Now, that's about a third higher than the amount that they sold in a similar period a year earlier. The paper says that it made the discovery by gathering together filings from the Securities and Exchange Commission. Now, most of the sales happened during the period when the firm was being propped up by $10 billion in taxpayer funds, and also during a time when it expanded its public float. Now, Goldman paid back the TARP funds, as we know, last month, but bosses like CEO Lloyd Blankfein could well come under fire over this revelation. An analyst that we spoke with earlier this morning gave us his reaction to the story. Oh, sorry, we don't have that for you. Now, I spoke to a few other analysts this morning ahead of the earnings today, and they said they're really looking to find out just how much risk Goldman is taking with its own money. There's this argument that the government support that was put in place for this bank kind of allowed it to go about business as usual, and some people say there's a danger, of course, of not learning from the mistakes that led us to the financial crisis in the first place, Scarlett.
Thanks very much. Lindsay Janis reporting for us from London.